everyone, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm excited to welcome you to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and good morning to you and happy new week. I do hope you all had a wonderful weekend out there. And this week is another new week, and of course, as usual, we are going to be taking another fresh new look at the financial market as we prepare for the new week. And of course, as usual, I shared a video during the course of the weekend which of course detailed what my plans are, but unfortunately I wasn't able to do more than one video due to the busyness I had during the course of the weekend. But trust me, we will be doing two videos today, where two assets today, top-down analysis on this asset in addition to the XAUUSD I shared during the course of the weekend. So this is a very beautiful time where you can actually see in real time how I do my top-down analysis in preparation of every week. And of course, you can use that opportunity as an educational guide in understanding price action analysis. So I encourage us all to grab your favorite beverage, your cake, whatever it is, and stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us. Well, as technical traders, we usually gather here every day in an attempt to do follow-up details on the assets we're monitoring through the course of the week. And the session officially kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on the ideas we will be deliberating on. And it's also important for you to note that my aim here is to equip you with the knowledge and skills necessary for you to make informed, independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said here, we will be diving right into the business. Well, first of all, a quick review of what happened last week. Last week wasn't didn't start on a rosy note. Remember, the first 2-3 days of the week was more of a range-bound trading activity, which is more or less characterized with the choppy market conditions, emphasizing the prevailing uncertainty throughout the first half of last week. And of course, we did emphasize and talked about the reason why the market was behaving the way it was behaving last week, and one of the major reasons was the resilient US economy, which of course had thrown out the idea of a potential rate cut as early as the month of March. And of course, we saw slews of speeches from the Federal Reserve officials, from the Fed chairman to Barker to Wallace, to a lot of them. And one of the major highlights from the speeches was the fact that inflation in the United States is still very high, and that the chances that interest rates will remain high for an extended period of time increased. And as a result of this, market participants were unsure of what the timeline for the interest rate cut for the year 2024 is going to be like. So as a result of this, a lot of people stayed at the sidelines, waiting for fresh impetus to give an insight into what is likely going to be happening, what is going to be the easing cycle of the Federal Reserve. Now, this week we are looking forward to a very important event, which is the consumer price index, which of course is an inflationary gauge to give us an insight into the level of inflation in the United States. And of course, the Fed officials, the policymakers, will definitely be looking forward to see what the actual data will be to give an insight into how they will be positioning themselves in terms of either tightening, monetary tightening, or easing cycle, whichever case it may be. So I'm of the opinion that as this week began, we may likely see some traction going forward, especially after tomorrow's CPI data, to give cues to major key players in the market. So last week, though we didn't start on a positive note, the later part of the week we saw traction on both the XAUUSD, we saw on the USDJPY too as well, helping us to recoup the loss we incurred at the beginning of the week, and of course made some profit on top of it. The USOILSPOT did very well. We saw our price continue to rise throughout the course of the week, though there was a little bit of choppy scenario between Wednesday and Thursday, but finally price gained more traction and continued to the upside. And one of the reasons that has incited the uptrend continuation on the USOILSPOT was as a result of the Israeli Prime Minister, who of course rejected the proposal from Hamas as regards to hostage release, which of course incited more concerns that tensions will escalate. Yesterday we saw some, they did some airstrikes in Rafah, the regional Rafah in Gaza, which of course has also escalated more tensions in that area. So we are going to be looking at all these and taking them into consideration while we review the current market structure from a technical standpoint. So I encourage us all to stay tuned in. I see your comment here, Chike Ukuka. Good morning to you. Glad to have you around with us this morning. Trust you had a wonderful weekend. So with that being said, here we will be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiment today. And of course, for those of you who have been with me for a while now, we know how important these fundamental factors are, as they usually manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after this economic event. Now, for this week, we have three assets which we will be monitoring, which of course I've done a top-down analysis on them, and I'm excited to share with you what my ideas are and what I will be looking forward to. Now, so for this week, we are going to be looking at the USOILSPOT. We will look at the USDJPY, and of course, we are going to be looking at my favorite asset, of course, the XAUUSD. So based on this asset on our watch list for this week, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, so far this week, we have a handful of high impactful events from both the United States and the Japanese economic docket. However, we will be focusing on the major ones for today. Now, for today, Monday, February 12th, there are no high impactful events. So what I did here instead was to include the mid-tier economic features, which of course, in the absence of no high impactful event, we could at least have an insight into what market participants will be looking forward to guide or influence that decision for today. And for today, we have three speeches coming in from the United States economic docket. So we have in about 5 hours from now, we have Bowman. Bowman is an American attorney and the governor on the Federal Reserve Board. She is a member, of course, of the Board of Governors of the Fed, and she is going to be having a speech later today. Then we also have Barkin. Barkin is the 8th president and CEO of the Federal Reserve Bank of Richmond, and is also a former board member and chairman of the Federal Reserve Bank of Atlanta. Then later on today, that's much more later in the day, about 9 to 10 hours from now, we have Neil Kashkari, the president and chief executive officer of the 9th District Federal Reserve Bank at Minneapolis, and is also a voting member of the Federal Open Market Committee, that is the FOMC. Now, one important thing about the speeches, and considering the weight this official carries, as they have influence, they have a better understanding of the U.S. economy, and of course the monetary policy outlook of the Federal Reserve. So the speeches here will be considerably influential in determining how market participants will prepare ahead of tomorrow's CPI data. Now, their remarks is going to provide us insight into the Fed's monetary policy outlook or policy stance, the economic outlook, and of course the potential future policy action, which of course participants will be analyzing their rhetorics to for clues about future policy direction. So these are very, very important events, so we want to be marking the time when this is going to be happening, so that we can have a better timing to capitalize on any potential opportunity prior, during, or even after this event. But one thing we do know as technical traders is that the anticipation of this event usually one way or the other influence the character of market participant, which of course would reflect on the chart as price action. So talking about price action, let's move right into the business and let's look at things from a technical standpoint. Now, as usual, I didn't open up the USOILSPOT chart, so I was going to take some time before it loads up. So let's exercise patience here. It will take about about a minute there, about depending on how TradingView plays out this morning. But while we load up, I see your comment, Jonah Aruna. Good morning to you. I trust you had a great weekend. And I also learned that Nigeria lost the final yesterday in the African Nations Cup. Though I didn't watch the match, I got to hear about the news this. Well, I'm not sure I knew what happened. I just realized that I was offline and that everything was just still. so I had to do some reset all over again. So I'm very sorry for the break in transmission. I hope we all get the message back right on my platform, as we had to share reshare the link all over again. But thank goodness we are back on, and we were about discussing and deliberating on the USOILSPOT. And now, before I go into the details, I mentioned earlier that I only shared one video during the course of the weekend, which is the XAUUSD. So this morning we have the privilege of witnessing real-time top-down analysis on both the USDJPY and the USOILSPOT today. So stay tuned in. So the first asset we're going to be taking on today is, of course, going to be the USOILSPOT. Now, on the USOILSPOT, we had a tremendous run during the course of last week trading session, as we were buying most of the time, and of course the selling opportunities we saw didn't do very well. I think we had 2 losses on 2 sell positions from last week's session, and but at the end of the day we were profitable overall, as the buy positions we had kept on rising. And one of the conditional factors, let me say, that allowed the surge in oil prices last week was the potential escalation of geopolitical tensions in the Middle East, particularly following Netanyahu's rejection of the proposal to halt the conflict in the Palestinian enclave. Now, other factors too also supported the ascent of oil prices, where we saw very robust data from the United States as regards to McHooks. It's an oil company over there, which of course revealed a good earning for last year, which was above the expectation. Then we also saw on Friday Baker Hughes released its oil rig count data, revealing no change in the active rig count, which remains steady at 499. Additionally, the upcoming publications of the OPEC's monthly oil market report tomorrow is anticipated too as well. This will of course be giving another fresh impetus into this particular market. Then, besides the geopolitical tensions in the Middle East, we also learned like 3 weeks ago an attack on oil plants in the Russian territory, which of course is going through construction at this point in time, and of course this also has affected the supply in the market too as well. So with all these factors in mind, we may likely see price continue to the upside, but we are not going to be jumping into conclusions, as we would also want to understand how market participants are thinking in the market, and this will be revealed using our technical skills. So to start with, for this week, we are going to be starting our analysis as usual on the higher time frame. Now, I'm not sure. Okay, I think I started analysis on the 4 hours time frame for this week, and right here on the 4 hours time frame, what I did on this time frame was to consider the nature of price action in the last 3 weeks. And if we look at this closely, we saw how that area around the $78 level had continued to negate all attempt by the buyers to break through. Now look at what happened here. Selling pressure around this area. We also saw selling pressure around this area, resulting in this strong engulfing bearish candle, bringing price into the structure at the first trading day of this month. And since the new month has begun, we have seen price action gradually found higher highs and higher lows here, giving us a couple of ascending trend lines to work with. And look at what we have here, connecting the ascending trend lines. Connecting the pivot lows here, we have these ascending trend lines. In fact, we have a couple of them. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that supports the idea of buying this asset. Now, going into today's trading session, into this new week, the question is, will the uptrends pattern continue, or are we going to see price retrace back to the downside? Now, to guide our trading decisions for this week, I had to identify our key level exactly around the $76.50 level, and this was exactly the same area where price action closed last week. Now, if we go to as far back as on the 25th of January, we saw how this level had played a major role in determining the direction of price action. In fact, it was more of buying niche at some point. Look at what happened here. Buying around this area, buying around this area. We saw the same thing also happen here, buying around here, then another buy here, engulfing bullish candle before price action broke down the structure on the last trading day of last month. And since that moment, price action has been trading below that particular structure. Now, despite the strong bullish momentum we witnessed last week, which we of course took advantage of, we saw that as soon as price got into that area again, buyers were finding it difficult to break out of that structure. So at this point, you would agree with me that we are at a crucial juncture in this market. We are depending on how market participant reacts to this key level at the $76.50 level will determine if we are going to be buying or selling this asset for this week. Now, if you zoom into the structure and coupled with the ascending trend line we marked out earlier, technically, I'm of the opinion that price will continue to rise, and if price continues to rise, price breaking above the $76.50 level will make quite a lot of sense for us to continue the uptrend. However, if price continues to drop, selling pressure continues to stay below the $76.50 level, break down the ascending trend line, this could welcome selling opportunity, and a further breakdown of the structure could incite more opportunities to sell. Now, with the information we have gathered here on the 4 hours time frame, let's scale down into the 1 hour time frame, where we will be able to see clearly how market participants have been reacting to this very important level since the new week has begun. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, zooming into the structure, let me zoom in so you can see price action has been oscillating just right around that key level at the $76.50 level since the beginning of the week, to further emphasize how crucial this juncture is. And while price action was oscillating around the $76.50 level, it is quite obvious that price action has been confined within a range right between the $76.58 level and the $76.26 area, just right above the ascending trend line, to emphasize the prevailing uncertainty in this particular market. And of course, you know how we do it whenever we identify ranges like this on our market structure. It's emphasized uncertainty in the market. Hence, we need to exercise patience and wait for price action to either break out of the resistance line of that range to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. Now, in the last 20 minutes or so, we saw this sudden breakdown of the support line, and you see how price just retested that area and incited some buy pressure immediately after price tested this ascending trend line. Now, for me, this is a suspect that buyers are still present in this market, as if we want to be selling this particular asset today, we will need some significant confirmation, like a breakdown, retest of structure, especially on our lower time frame, let's say the 15 minutes time frame, for us to start considering selling this particular asset. But if price breaks out of the $76.58 level, which happens to be the resistance line of that range we just identified here, it will make quite a lot of sense for us to buy, and considering the fact that price action will have broken above our key level at the $76.50 level. So in that regard, I have a buy stop order sitting above that structure with the hopes that if price continues to find new highs, we can capitalize on that opportunity right there. Now, in terms of the selling potential in this market, I would like to see price break down the $76.26 area, retest it before I jump into any position. So in that regard, and considering this sudden breakdown and sharp rejection of that ascending trend line, let's scale down into the 15 minutes time frame to see how the market has been reacting to the structure. Now hold on a second, let me go back here. I would like the support line of this range to reveal itself on the 15 minutes time frame, which will of course give us a clue into what is going on around here. So let me just reduce it to 10 minutes. Yes, 10 minutes is quite good. So now look at the structure right here. I think it makes quite a lot of sense for us to sell right now. And looking at what we have here, price from a technical standpoint, price just broke down the support line and may come back, retest the structure. And if that continued selling pressure happens around this area, it makes quite a lot of sense for us to sell below the $76.26 area. And in fact, if price goes ahead to break down the ascending trend line, this will give us more confidence to consider adding more sell position, and that will make quite a lot of sense to add more at the breakdown of the lowest point for this week, which is exactly at the psychological level at the $76 area. So I will be adding one more level here, which we will be using to guide more selling opportunities around this area if price action continues to drop to the downside. So at this point in time, based on this current structure, we maintain a bearish bias in this asset. And of course, please, let's give enough breathing space for price action to move around. So stop losses anywhere close to or above the key level at the $76.50 level, which will be dovetailing to about 25 to 35 pips stop loss, depending on where your entry point is on this particular asset. So at this point, based on the fact that price broke down the support line of that range at the $76.26 area, we will be holding on to a bearish bias here unless the market structure says otherwise. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So this is my simple view on the US Oil Spot today. We maintain a bearish bias as long as price remains below the $76.20 level. So let's have a self-stop order below that structure so that we can capitalize on that bearish move. However, if the contrary happens and price continues to climb high, then a breakout of the $76.58 level will welcome buying opportunities. And I told you earlier that we have a buy stop order right above that structure to capitalize on that uptrend move. So let's exercise patience, mark out these levels, be on standby to capitalize on any of these opportunities from the levels we've identified here. So this is my simple view on the US Oil Spot for today. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and I do hope we all mapped out these levels accordingly, as they will be playing a major role in guiding our independent trading decisions for today. So with that being said, let's move right into the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and what a phenomenal week we had last week, as we did capitalize on a strong bullish momentum where we saw the US dollar capitalize on the dovish remark from the Bank of Japan's deputy governor Uchida, who was suggesting that there's going to be a cautious approach to tightening even after moving away from the current negative interest rates. Now, market participants were not keen to hearing this. Remember, a couple of weeks ago, the Bank of Japan Governor Ueda was inciting the idea of a potential pivoting from the current ultra loose monetary policy the Bank of Japan is currently running. And this was due to signs that inflationary pressure in the Japanese economy is gradually reducing back into their 2% target for the year. And this, of course, sent in some ripple of excitement and glimmer of hope for buyers of the safe haven Japanese yen. And we saw the yen gain some traction during the 2 weeks ago, but due to the resilient U.S. economy, they were not the traction the Japanese yen gathered wasn't able to push price further to the downside. Now, when the Bank of Japan's governor last week made this comment, though one thing for sure was certain from the comments is that there's going to be a pivoting from the current ultra loose monetary policy in the month of March or April. But the caveat there that there's not going to be an aggressive rate hike is not something market participants want to hear. And as a result, we saw how the US dollar capitalized on this opportunity as market participants kept on buying the US dollar against the Japanese yen. However, despite this expectation of this, there are some other factors here that could likely support the yen this week. And one of the things we are looking at from the economy is a substantial wage increase from major Japanese firms, which may stabilize inflation in the country and potentially prompting the Bank of Japan to adjust its ultra loose monetary policy settings earlier than expected. Meanwhile, on the other side of the pond, the US dollar struggles to attract buyers, especially during the Asian session, and this is as a result of the uncertainty surrounding the Federal Reserve interest rate cut plan for the year 2024. And as a result, the USDJPY pair may continue to do range-bound trading activity, especially as we look forward to the CPI data tomorrow, which of course everyone is looking forward to for fresh impetus and of course clues into the federal rate cut trajectory for this year. So in that regard, we will be looking out for short-term trading opportunities on this particular asset, at least for today, while we anticipate the CPI data from the United States tomorrow for fresh impetus into this particular market. Now, due to the fact that I was unable to share my analysis on this USDJPY during the weekend, I will be doing a top-down analysis on this asset for us today so that we can all have an holistic perspective into what is really going on in this market from a technical standpoint. Now, to start our analysis for this week, we will be moving into the daily time frame. Now, on the daily time frame, after considering the nature of price action, we've talked about this countless of time. We've been looking at price action since the beginning of last year, but instead, in preparation for this week, what I did was just to focus on what has been going on since the beginning of this year we are in. So looking at what has been going on since the beginning of the year, you will see here that price action has been very, very bullish. And if we connect the series of higher lows correctly, we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above this ascending trend line, we have no business selling this asset, as we will continue to look out for patterns and structures that support the idea of buying this asset. Now, for the fact that price remains above the ascending trend line, I have a couple of levels here which we will be using to guide our decisions for the week. The major one right here is my key level, which is situated at the 149.600 area. Look at how beautifully this level had played a major role in determining the direction of price action since the month of September of last year. That's an historical data of about 5 to 6 months, if I'm right. And during the month of September, we saw how this area was more or less a selling niche at every point in time. Buyers tried to break out of that structure. It failed. And we saw a couple of breakouts here. We saw price breakout here to find the highest point in the USDJPY in a long time before price action did break down in the month of November. And since then, price action has been trading below the 149.600 area to emphasize the strength of the sellers around that area. Now look at what has happened here. During last week's trading session, we saw our price close just exactly below the 149.600, and as soon as price got into that price level, we saw some signs of selling pressure around that area. Now the question going into the new week is, will selling pressure persist below the 149.600 just like it has been doing during the later part of last year to incite a sell-off? Is that a possibility for today? Or are we going to be seeing an uptrend continuation pattern form around this area to incite a breakout of the 149.600 to incite another wave of bullish momentum? So we are at a very crucial juncture in this market, and in fact, if due to the uncertainty in the market, we may see a situation where price could go through consolidation between the 149.600 and the 147.900 before a decision is made, maybe a breakout of the resistance line or the breakdown of the support line for trading opportunities. Now, with the information we have gathered here on the daily time frame, scaling down into the 4 hours time frame, I have this level here at the 148.700, which was broken on Thursday of last week. We saw price take out this level for the first time in about 2 weeks. And from a technical standpoint, when price breaks out of a key structure like this, we expect maybe at some point in time price may come back to retest the structure in an attempt to continue the uptrend move. Now, will this be the case today? Is that the case going to be today, or are we going to be seeing price just climb all the way, breaking out of our key level at the 149.600? Now, to answer this question, we want to see how market participants have been reacting to the structure since this new week began. Now, to see this clearly, we will need to scale down into the 1 hour time frame, where we want to be taking into consideration the nature of price action since the new week began. And if I zoom into the current structure, you will see here that the new week, the Japanese yen started the new week on a subdued note, trading within a narrow range against the US dollar. As you will see right here, price action was confined within the 149.325 and the 149.080 area to indicate the prevailing indecision going on in the market at this point in time. And you know how we do it in this community. When price action falls into a range like this, we want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, with the way things are going right now, the new week has started on a bearish note. If you look at it closely, you'll see that we have been seeing a series of lower highs in this particular market. In fact, if I bring out my line chart and connect the series of lower highs, you will see that we have a descending trend line to work with. And you know how we do it in this community. Whenever we have a descending trend line like this, we want to continue to look out for patterns and structures that support the idea of selling as long as price remains below that descending trend line. So as it is right now, I will encourage us all to mark out that descending trend line. Hence, we look out for selling opportunities as long as price remains below the structure. Now, with the support line of this range identified at the 149.080 level, let's see price breaking down the structure for us to join the decline to the downside. So we may be seeing something like this, which is currently going on right now. So having a sell stop order below the 149.080 area makes quite a lot of sense for us to look out for selling opportunities to join that decline to the downside. Now, remember what I said earlier, that our trading decisions ahead of the CPI data at this point is going to be more or less a short-term perspective. So let's keep this in mind while we continue to monitor price action. However, in as much as we're looking out for selling opportunities here, considering the fact that the week has started on a bearish note, we cannot ignore the potentials that buyers can come in. Remember last week we bought the USDJPY throughout last week, scooping in some significant amount of profit, and this momentum could still continue today. And of course, if you look at how this area here has been negating all attempt by the sellers to break through, we saw what happened here. Price is yet to break down and close below the structure today, and it may likely become a platform that will incite new buying opportunities. Now, if this is going to be the case, then placing a buy stop order above the resistance line, that is the highest point for this week at the 149.325, makes quite a lot of sense. However, while we wait for buying opportunities above that level, I still think that we can join a bullish move even before the breakout of that structure happens. That is, if the market gives us the opportunity to. Now, what am I looking out for to buy even before the breakout happens? Well, I will first of all need price action to breach this descending trend line, that is, break out of this descending trend line, something like this, break out of structure, retest. Mind you, we need a retest, we need some confirmations giving us signs that buyers are gaining momentum here. Then we can join, then have a buy stop order above the 149.325, and then looking forward to add more positions at the breakout of our key level at the 149.600. So at this juncture, we need to be very, very careful. The market is consolidating at this point. We have a descending trend line which will be supporting the bearish buyers, but if price breaks out of that descending trend line, we begin to get ready for buying opportunities in this market. So I encourage us all to mark out these levels on our chart. Let me zoom in out very well so we can see things clearly. Mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Now, if it so happens that price breaks out of the descending trend line, we shall be looking at the 149.200 area as a yardstick to guide buying opportunities here. So I'll give this a blue color, and then we should mark this area as the 149.200 level. So if price action breaks out of this confluence of this level and the descending trend line, then we would be looking out for confirmations to buy above that structure. So let's mark out that level 2 as well and see how the market is going to play out from this particular area. Like I said, if you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, and please use that time as well to give the video a thumbs up. Your likes are valuable to me, and it helps the channel to grow as well, and of course helps the algorithm to push the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. And for those of us who had liked already, thank you very, very much. I really do appreciate. And for those who are yet to like, it doesn't cost anything. This is the cheapest way you can actually support this channel to grow. And thank you very much as you do so. Wow, thank you very much. I just saw a comment from Alexandria from Jamaica. Very, very excited to have you around with us this morning. Trust you had a wonderful weekend. I'm sure this must be your first time with us. Is that true? Please let me know in the comment section. Thank you very much for your compliments. And in the absence of no questions, I want to assume we are all on the same page, and I do hope you marked out these levels accordingly and structures, as we will be definitely needing them as a reference point to guide our independent trading decisions for today. So with that being said, here we will be moving right in to the final asset on our watch list for this week. So the final asset on our watch list for this week is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And the week has started with a situation here where price action has been trading within a narrow range, hovering exactly around our $2,025 area, which happens to be our key level for this week. And quickly here, let me state this. I wouldn't be doing a top-down analysis on the XAUUSD. I already shared a video during the course of the weekend on this particular asset, so I encourage you to go ahead and watch this video so you can understand and have a background understanding of how we got to the point you will be seeing on the charts in a moment. So our key level identified in the video was situated around the $2,025 area, and of course I did emphasize how important that particular structure is and how it had played a major role in determining the direction of price action in the past. And as it is, I did emphasize in the video that depending on how market participant reacts to the structure will be determining how we are going to be trading this asset this week. How we're going to be buying, how we're going to be selling. Well, whatever happens around the structure will tell us what to do. And the prevailing sentiments in the market right now, due to the consolidation phase we are seeing here, suggests that the Federal Reserve is likely to maintain higher interest rates for an extended period of time due to the resilient nature of the United States economy. Now, this stance has bolstered the U.S. Treasury bond yield, and we all know how the U.S. Treasury bond yield is directly proportional to the U.S. dollar. If the U.S. dollar rises, the U.S. Treasury bond does so, and if the U.S. Treasury bond drops, the dollar too also drops. Now, while the overall positive sentiment in the equity market is also seen as a factor restraining the upward movement of gold prices, it is very, very important to also note the uncertainty surrounding the timing of the potential interest rate adjustment for the year 2024 by the Fed. Now, this may impede the rise of the US dollar and further project a consolidation phase in this particular market to emphasize the indecision going on in the market. And I'm of the opinion that market participants may currently refrain from taking any aggressive bets, especially as they look forward to the CPI data tomorrow, which will be giving an insight into the Fed's future policy decisions for this year. Now, given this backdrop, we need to be very, very careful in this market, as we need to see confirmations before we jump into any positions here. Now, to guide our decisions for this week, it's very, very important, like I said earlier, for us to understand how market participants are reacting to our key level since the new week began. Now, price action has more or less been trading around our key level, oscillating up and down around our key level, and this for me is a good sign that we actually identify the right key level for this week. Now, with the situation we have here, we can see price action is currently confined within a $5 range, that is the 2027 and the $2022 area to emphasize the prevailing uncertainty in this market. Now, with the situation we have here, we have no other choice than to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, due to the fact that the market was bearish last week, I'm of the opinion that we can easily place a sell stop order below the $2022 area to capitalize on a downtrend move. Now, if you look at the $2022 area, you will see that this area has been a buying niche since the later part of last week, and for the fact that market participants are now leaning towards an extended a high interest rate for an extended period of time, as all odds are shifted to May right now, the dollar may continue to rise, and if the dollar rises, definitely the gold will drop in price. Now, I'm of the opinion that a breakdown of the $2022 area could incite more selling opportunity in this market, as it would have taken out all the buy positions around that area to emphasize the strength of the sellers at that point. So placing a sell stop order below that structure makes quite a lot of sense. However, buying the breakout of the $2027 area will need some confirmations. Now, if you look at the nature of the candles around here, you will see that buyers are finding it difficult to settle closer to that resistance line. Every time price tests that structure, we see a sharp rejection, showing signs that sellers are pushing price to the downside. And because of this character in the week of this candle, I'm of the opinion that we want to see price break out and retest the structure before buying this particular asset. Another thing that we should also take into consideration here is this ascending trend line I identified in the video, in my weekend video on this particular asset. Now, this trend line here has been supporting the bullish idea in this market, continue to find buy pressure every time price comes into that trend line. Now, that trend line here shares a confluence with that 2027. So like I said earlier, we will need price to breach the trend line, climb up, break out of the 2027, retest of structure before we jump into any buy position here. So buying the XAUUSD at this juncture needs some confirmations before jumping in. But for selling the XAUUSD, placing a sell stop order below the $2022 area makes quite a lot of sense. So our center of focus for today is between the 2027 and the 2022 area, where depending on the direction of the breakout will give us an insight into where price is likely going, at least for the first half of the new week. So this is my simple view on the XAUUSD, and of course we will continue to monitor price action here. And we have the XAUUSD live window where we also monitor real-time price action on this particular asset. I already dropped the link to the XAUUSD live window right in the comment section. It is pinned at the top, so you want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. The XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD during the New York session. So it officially kickstart between 5 to 10 minutes into the New York session and last about 5 to 7 hours depending on the nature of trading activities for that day. So I look forward to seeing you all in the comment section of that platform. So with that being said here, I think we have come to the end of today's Forex Morning Mastery session. I do hope you were able to gain one or two things from what we discussed here today. So let's see how the market is going to be playing out. If you have questions, feel free to drop them while I round off on today's Forex Morning Mastery. So far today, we were able to attend to 3 assets where I did a top-down analysis on both the USDJPY and the USOILSPOT, and of course we also attended to the follow-up on the XAUUSD. And on all of this asset, we were able to identify simple trading setups that we will be using to guide our independent trading decisions for today. And I do hope we marked out the structures on our chart, as we will be needing them to guide our decisions. If you have done so, Well done to you. All we just need to do is exercise patience right now and allow the structures to mature. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, I look forward to seeing more of you. Same time tomorrow, 10 a.m. UTC. Sorry, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for a major event tomorrow, that is the CPI data, which is definitely going to be bringing some traction into the market, and we do want to be on standby to capitalize on that move. So with that being said here, I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.